Market myths
Let's do it.
And realities. A lot of people have these crazy ideas that September, even Vanetta said this morning, what about this Christmas Santa Claus rally? What about this December to remember? All this kind of stuff. So let's take a look. Market myths and realities. Exploring December. December being the final month of the year is notable not only for its major holidays like Christmas and New Year's, but also for the impact of market trends. In the trading community, it's common to hear about the anticipated Christmas or Santa Claus rally. Now that we're in December, we want to address this topic. So we did a study today to provide statistical analysis to determine whether December actually outperforms or underperforms other months. Would you like to take a bet? Make a bet.
To determine whether December outperformed or underperformed. I'm going to say there's a slight non-statistical advantage to December to the upside.
So we did a 10-year study in a bull market. So if ever you were going to have a little bit of bullish, a little bullish tilt, let's say, you couldn't do better than the last 10 years. And we looked at tons of different things. The 16 Delta Strangle, 45 days to expiration, managed at 21 days, average. We looked at a price change, implied volatility, standard deviation, premium collected, the ratio of premium collected as a percent of buying power, and we compared the results for the entire year. The graph below provides an overview picture of implied volatility and implied volatility change since 2018 to now. So you can see we're kind of on the very low end of implied volatility and implied volatility rank. Here's where we start getting into the meat. During the last decade, the daily changes in implied volatility and price have shown consistent average percentage across all months. This suggests that December generally exhibits the same daily implied volatility and price fluctuations as other months. Yeah, I mean, December's on the low end. It's average for price fluctuations. It's on the low end for volatility change, daily volatility change. It's on the average for price fluctuations. You're right. There is really, I mean, our research team is correct. There's really no difference between December price, any other month for that part. 0.6%, right in line with everything else. High end of the range there, but low end of the range with respect to implied volatility, right? Nothing jumps off.
Nothing there.
Yep. Let's go next slide. So regarding volatility, when analyzing the standard deviation of the average portfolio, that means how much swings do you take in December relative to the amount of premium that you collect? And again, the results are generally consistent across all the months. So the average P&L in December is kind of, it's right in the middle. And the average premium collected in December is right in the middle. So I guess the point here is that when you think that there's this incredible opportunity because December has, a one-way market or whatever, the reality from a trader perspective, that's why it always drives me crazy when the media jumps all over this Santa Claus rally, because the reality of the rally is that the opportunity is no different than any other month.
Sure.
Like that's the thing that gets lost in all the ridiculous headlines, is the idea that, oh my God, there's, Santa Claus rally, make all this money. No, the reality here is that it's the same. Opportunity is the same across every single month. To gain a deeper understanding, we're also going to examine buying power. First, the buying power remains relatively consistent across all months. And next, the ratio of premium collected as a percent of buying power used is approximately equal, averaging around 5%. So you can see on that bottom line, that's the ratio of buying power used as a percent of buying power to do, to actually put a strangle on. And there's no difference in December than any other month. And the buying power used is basically the exact same in December as every other month. The reason it's just a tad higher is because usually the market has rallied every year. So it's more expensive by December. Let's go next slide. So even though December is the last month of the year and includes the holidays Christmas rally, many traders expect a change in price volatility or overall market activity. However, our analysis shows that the results are generally consistent throughout the year, meaning that you don't have this ridiculous opportunity in December. And like I said, the last 3 Decembers, the triple witching move has actually been lower. However, individual assets may experience impacts during this time, so it's important to manage your positions carefully. Yeah, of course, that goes without saying. But the reality is that when you start to look at the numbers and you look at it from an opportunity standpoint, there is not much difference